February 20th, 2024, whenever you get a strong pair of bear bars on the open or bull bars, but in this case, bear bars, you got to be aware of the measured move, especially when they're, really big like this and relatively climactic. I think you have to be aware of the potential measured move down. And you can see that's what we ended up getting. Generally, when you get this, 60% chance if you put a stop above here and, take profit order basically or a limit order right here, 60% chance you're going to get down here. So reasonable to sell in here. Additionally, we had yesterday's low right here, which is an important magnet. And whenever you get a gap down, you have to be paying a lot of attention to the low of the prior day to see if we get back to that low. Why? Because there are bulls who bought below yesterday's low who need to get out around break even. And if this is a trading range, or who want to get out around break even, if this is a trading range, then they should. And if this is going to end up being a bear trend, then it's possible that you already have your first set of trap traders with yesterday's low. So I think that's why it's important. I don't count this as a day. So I look at this as yesterday. Bar one, bull bar. It had a big tail on the top though. So disappointing for the bulls. I'm just going to put this here so I don't have to keep scrolling back. Disappointing for the bulls who, were front running the buy. Some bulls will buy the open of the day as bar one opens, hoping that essentially to front run the buy and get back to yesterday's low. And they were hoping we were going to get a really good bull bar closing on its high, and they might be in really early on what could be a really strong bull trend day. But instead, we end up getting a big tail on the top of the bar. And when the bulls see the tail, what do? Well, most of them just scalp out for a couple of points. I don't know if they got 5, if they bought, let's say they got filled right at the open today, about 5 points. But you can see the bulls who, bought were disappointed with this tail on 1, and all of them just hit sell the market and flattened, and that's what caused the big bear bar on 2. Follow through for the bears on 3. So big bear bar 2, follow through 3, but a tail on the bottom of 3. So something is wrong with this. You'll notice that the bulls who bought below 1 are trapped as well. So you might have trap traders who from below 1 and trap traders over here. And it could be 2 early open gaps. And generally, when you get 2 early open gaps, in general, when you get 2 early open gaps, a lot of the times you can end up getting trends. You can see open gap, open body gap, and open gap, open gap, open gap. We end up getting a big reversal. But a lot of times, there's an open gap yesterday and an open gap here. You get something like that. So traders were hoping that essentially if we could keep this gap open, that we would get a big bear trend day today. So pullback on 4, inside bar, technically a low 1 short, but you get bad follow through on 5. It's also a doji, so probably not going that much lower. 5, reversal up. The question is, are we going to get back to the 1 low? I think so. The bulls buying above 5. Well, I wouldn't buy above 5. It's a bad buy. They're hoping it's a double bottom with 3, but they want to get back to the 1 low. 6, a reversal down. It's a double top with 4, but you're selling in a tight trading range. I think the argument for selling it is that you have this open gap and you're hoping that it's going to stay open and we might get a big bear trend. So if you're selling it, it's probably a swing and you're hoping that we're just going to get a lot lower. Follow through on 7 for the bears, but a tail on the top of the bottom, so not as good as it could be. And a disappointment bar on 8. Bears were selling, hoping it was going to close near its low, and it didn't. So some of them scalped out and just took, a couple points profit, and that caused the bounce on 8. A second leg down on 9, but this could be 3 pushes down. 1, pullback, 2, pullback, 3. Big bear bar closing near its low on 9, but really not all that great. You have big tails on both sides, and the bulls who bought below 8 are probably going to end up making money since they were buying below a bull bar, and that was a reasonable thing to do. Disappointment on 10, because most traders not willing to sell below 9. This is pretty climactic, and if you think about it, what are the odds that we're just going to sell off like this all day? Very low. So we're probably going to get some sort of pullback. Usually, when you're going to get those small pullback bear trend days with the open gaps, you're going to have to get some sort of pullback in there. 11, an inside bar. So it's a triangle on a lower time frame, but it's, it's not really a great buy above, not really a great sell below. It's really just, probably mostly sideways. You can see 12 tested back to the 6th low, and bears who, resold the 6th low again, causing a doji bar on 12. I'm not selling below 12. It's a low 1 short, but it's a big doji bar essentially. So really not all that great. And you get bad follow through on 13, failed breakout below the 9 low. So now we definitely have, wedge 1, 2, 3, or 1, 2, 3, however you want to look at it. But we definitely have a wedge on 14. Do you buy above 14? It's probably okay to buy above 14, but you have to keep in mind that this is a relatively tight channel, so it's probably going to be a minor reversal, not a major reversal. Follow through on 15, but a big tail on the top. Bull bar closing near its high on 16. And then look at 17, a tail on the top. So we have bull bar, but then a big tail, bull bar, but then a big tail, bull bar, but then a big tail. So what does this look like on a lower time frame? It's probably some sort of parabolic wedge, right? Because up on 15, down on 15, up on 16 and 17, down on 17, up on 18 and part of 19, and then down. So it's essentially a wedge. And if you look, I don't know, we'll pull up so 10:35 to 11 o'clock. If you look at a 1 minute chart. Exactly. 1, 2, 3. So it's forming some sort of wedge on a lower time frame. So you have to keep that in mind. Traders are going to hope for a breakout above the wedge, but probably not going to end up getting it. And that's why, 20 traders, bears are hoping it's a wedge and they're going to get a measure move down. And bulls are seeing this as a really tight bull channel, which it is, and they want a pullback and a swing up. This is, essentially, you have essentially a trend line break here, and then bulls want a higher low and a major trend reversal. But we probably need to get a deep retest first. Follow through for the bears on 21, but not all that great. Probably sellers above, probably buyers below. 22, we got sellers above 21, and we essentially tested back to the 19 close. So the bulls who got the close of 19, disappointed in 2021, getting out around break even 22. 23, a bull bar closing near its high, a double bottom with 21, and a second entry buy for the bulls. But the bulls haven't had a close above the moving average yet today. And traders have been selling the moving average every single time that we've taken it. Or selling the moving average every single time that we've touched it. So I'm not really, convinced that 23 is the best buy. It's low probability for sure. I'm just not sure how much the reward there's going to be, since it might be a more minor reversal, and we haven't had a strong close above the moving average yet. Bulls buying above 23, we're hoping 24 would be a strong bull bar closing above the moving average. But yet again, it's a kind of disappointing bar with a tail on the top and a tail on the bottom. And they exit their longs around break even, causing the big bear bar on 25. Disappointment for the bears who sold below 20, or selling close 25. Well, first off, if you're selling close 25, you're kind of expecting disappointment. You're selling after 3 straight bull bars and after this, and you're selling in the middle of an overall trading range. So it's really not all that great. And you can see, where did 2026 touch? Well, it touched the high of 14. Why the 14 high? Because 14 was a swing point, and generally when swing points get tested, they end up getting finding traders on the other side. Let me explain that a little better. So 14 was a minor reversal and lower probability. So therefore, bears knew that if they sold above this and were willing to scale in higher, they were probably going to have a chance to get out around break even. And you can see of their first entry with profit on their second entry. You can see if they sold here and kept scaling in, they waited and then they saw 26 and they took their chance to get out of break even because they were obviously disappointed in this. Same thing over here. What if you bought below 6? Well, you weren't let out here, so traders had to keep scaling in lower. And then look what happens on 12. It gets back to their initial entry price. The traders bought below 6. They scaled in lower. They exit that around break even, and that's what causes essentially all of that selling on 12. So it's the same concept here. Doji bar 26, bad follow through for 25, and a bull bar on 27, but tail on top and tails on both sides of 26, so not all that great. 28, a bear bar closing near its low. It's a low one short, but one thing I didn't like about this was the fact that the 23 low overlapped with the 28 high. So essentially, the bears who bought below here and bought more lower, they were let out around break even. Or at break even on their first entry with a profit on their second entry. I have a bad habit of saying around break even, but what I meant was they're buying below here, they're scaling in lower, and they're making a profit on their second entry, and break even on their first entry. And the reason that's important is because if this is going to be a bear trend, I said bears, bulls. I meant bulls who bought below here and scaled in lower. So the bulls who buy below here and scale in lower are making money. So if you're a bear and you want a swing down, do you think bulls should be making money in your bear trend? Probably not, right? So you usually don't want the other side to be able to make money in your trend. Otherwise, it's probably not as valid of a trend. Follow through for the bears on 29. It was kind of a surprise bar. I didn't think that 28 was going to get much follow through, but instead we got a bear bar closing near its low. So traders, sold at the market, and that's what caused a big bar on 30. 30 is pretty climactic. Probably going to get profit taking relatively soon, but it is still sell to close, still okay to be short. Follow through 31, and then a doji bar on 32. Doji bar means the sell to close probably coming to an end pretty soon here, and we're probably going to start to go sideways. 33, outside down, good for the bears, low one short. And, we have another set of trap traders, but I'm not sure. This was really concerning. The bulls got a really tight bull channel with a couple of good bull bars closing near their highs. And you really don't want that to happen if you're going to get a big bear trend day. So because of, this really changed the rest of the day, and it made traders wonder, are traders going to have, or bulls going to have a chance to get out to break even at some point? Follow through 34 and inside bar 35, final flag, inside bar 36. So II, final flag. Bulls, so bears are going to exit above 36. Bulls might buy, but it's probably only, for a scalp, and you touch the top of the trading range, and you have, much better than 2-to-1 of your true risk. And a lot of traders just see that, and they just exit. It was at the top of the channel, right? So you had a spike and then a pullback, and then the channel phase started at 33. And oftentimes the tops of channels are magnets, or the bottoms of channels. It's a bull channel. And you can see here, even 6, spike, pullback, channel, we retested through the top of the channel. So 37 follow through, and the bulls saw that. And I think a lot of them just took profits, causing 38, which went down to that measured move. Big reversal up 39, but I actually wanted to see something. Yeah, we came close to the moving average today, but didn't quite touch it. I thought the moving average was going to be a magnet. Big bull bar closing near its high 39, but really big risk if you're buying above 39, right? So if you're buying, your stop's way down here, and your measured move, you're hoping for 2-to-1. So you're going to have to get all the way back up here, maybe even back to the one low, to make, a reasonable profit buying above 39. So what do traders do when they see something like that that's that big and they want to buy, but the bar's just too big and you're buying towards the top of, a 3-bar tight trading range? What they do is they buy a 50% pullback of the bar. So bulls, instead of buying above 39, they bought the 50% pullback of 39 during 41. If you buy above 39, I don't think you can exit below 40. It's a bad low one short after this. We have all these good bull bars. We have 2 good bull bars, 36, 37, a good bull bar, 39. So I don't think it makes sense to sell out of longs below 40. And you can see 41 just dipped to the 50% pullback, and bulls bought it immediately. Some of them will scalp at the moving average because we haven't had a good close above moving average yet today, but a lot of traders will hold for a swing. Disappointing follow through for the bulls, 42. Not many buyers above 41 since there's a tail on the top, and we're at the top of this tight trading range, but we're probably getting back to this low, the 13 low. 43, a low too short for the bears at the moving average, but too many good bull bars, too much bullishness overall in the day to be doing that. It's true that we haven't had a close above the moving average yet for the bulls, but just overall, this has been, too bullish in general to take sells like that. 43, bear bar closing near its low, but again, I wouldn't sell it, 2-legged pullback maybe. 44, disappointment, and inside, bad follow through 45, so just a tight trading range. Failed breakout below the low of the range, 46, and a bull bar closing near its high. Do you buy above 46? If you do, you're looking for, so first off, if you buy above 46, that even if you get a good bull close, there are going to be bears that are going to just sell the market the moment that the bull bar closes, because it's the first bull close above moving average, and we're 46 bars into the day. So even if 47 is a great bull bar, that there are going to be bears selling the close, thinking that the best case for the bulls is probably sideways. Additionally, that the 13 low is a magnet, and so even if we get there, they're probably going to be sellers because the bulls who bought below this low are disappointed in this, and they probably want to sell out of their longs. So if you take it, you're hoping for, something like this, just like a huge bull bar, huge surprise, and you get 47 with a tail on the top. And when you get that, the bulls know the bears are going to sell. So they start to sell as well, and the bears sell. That causes the big bear bar 48. Bad follow through for the bears on 49, since I think a lot of 48 was bulls selling into longs, knowing that traders, they weren't going to, it was a lot of bulls selling into longs, just knowing, again, like the 13 low, knowing that it was a disappointing bar on 47, bad follow through 49, big tail on 48, so not all that great. 50, an inside bar. You could argue that it's a truncated wedge, I think, 9, 38, 47, and essentially a double bottom with 39. And we do have a close above the moving average on 47, pretty much completely above, which is really important for the bulls. And then you end up getting follow through for the bulls 51. So if you buy above 50, you get good follow through 51. Disappointment 52, probably technically by the close, but maybe the upside is limited. Disappointment 53, so 2 doji bars and a bull bar closing near its high on 54. But if you're buying, you're looking for a measured move up, a breakout above this trading range, and eventually, obviously, you end up looking for a measured move up like here, but obviously never got it. Which, funnily enough, This was, so bears were trying to get a wedge, 1, 2, 3, and we got a breakout above on 64. And the measure move up of the wedge ends up being right around the 1 low, which is where bulls initially got trapped. So 55, the bear bar closing near its low, but it doesn't trigger. Why doesn't it trigger? Because bulls buy the close of 55, knowing that, they know that pretty much all bulls are going to get out of longs below 55 because it's a strong bear bar closing near its low, and it's essentially a failed breakout of this. You can see the high of 47, 49.84, the high of this, 49.84.25. So we got a failed breakout above this high. The bear bar closing near its low, so bulls are going to get out. So they bought the close and put a stop 1 tick below, and they have great risk reward. But low probability. They're only risking, a couple of ticks, and that's why you get the micro gap up 56. Bulls bought the close. Do you buy above 56? Maybe, but you need fast follow through, I think, and you don't get it 57. And then disappointment. But are you going to exit below 57? Kind of a tough call. It's a second entry short for the bears and a couple legs up, but it's probably not going very far. And it's if you're selling right on the moving average, you can see you got follow through 58 for the bears. Sorry, not follow through for the bears. And you got outside up 58. So some sellers, but where did bulls buy? I think the low of 58 is important. You can see here a couple of times bears, sold above this high, scaled in higher, they were let out. Bulls bought below this low, bought lower, they were let out. The bears who sold above the 52 high, they're still trapped. And they ended up getting out late in the day, and that's probably what this vacuum test was. But they ended up getting out late in the day, but they're still trapped on 58. So bulls bought before and kept them trapped. And then you get a big bull outside up bull bar closing near its high. Disappointing follow through 59. So bulls really wanted a good follow through here on 58, or on 59 from 58, but they don't end up getting it. But again, bulls buy the close 59, buy the pullback, and they get a bull bar closing near its high 60. Bad follow through on 60 during 61, probably buyers around the 50% correction during 61, and then an inside bull bar closing near its high 62. A credible swing buy. I thought, bulls might get out below 61, which is probably another reason why bulls bought the close. 62 closing near its high. So do you buy above 62? I think it's a pretty okay buy, looking for a bounce maybe to the 24 low. Why the 24 low? Because bulls bought below 24. They haven't been let out break even yet. And that's one of the reasons we got up here. Follow through 63, but a tail on the top, so not all that great. And then a huge bull breakout, 64, and it's a breakout above channel, right? So it's a breakout above a bull channel, so lower probability to buy above 64. 65 closes near its low, and bulls try to do again what they've been doing all day, buying, bear bar, bulls should exit, but they buy the close. Bear bar, bulls might exit, but they buy the close. Bear bar, bulls will exit below 65, but they buy the close 66 and give themselves another chance to get out break even. Outside down 67, so failed breakout above the high of the day, and a bear bar closing around, kind of around its midpoint. 68, high 2 buy. But again, I think the fact that the bears who sold above 63 were not expecting 64, and bulls tried to keep them trapped 65, 66 and not let them out. But then 67 lets them out. So that makes 68 a worse buy. It makes it lower probability because you have less trapped bears. Additionally, buying above 68, you're buying the top for tight trading range. It's not that great. Bear bar closing near its low 69. You sell below 69. You're selling lower in the tight trading range. So the follow through is probably not going to be very good. Like I said, on 70. And then more disappointment, 71. So a lot of traders, they sell below 69. They're disappointed 70. They're disappointed 71. They exit at the market, causing 72. But now you're back at the top of the trading range. And surprise 73, is it bears selling or is it bulls selling it along? So you could make an argument it's bears selling to defend their stops on 69. I'm not sure what bulls would have bought necessarily. But you could say that all the bears who wanted to cover their shorts have done so. So there's no one left to buy up here. And you get a vacuum test 73, 74 of this low. But the bulls who bought below, you can see even here, the bulls who bought below here are disappointed in this, and they get out around break even during this rally. Stop orders, I don't really trade until bar 6. So you could probably sell 6 for a swing. I thought you could buy above 14. I thought 23 was okay, but it's just low probability. 28 is probably fine, or 29 is probably fine. I wouldn't sell 28, probably buyers below. But once you get this, surprise on 29, sell 29, sell 30, 31. Do you buy above 46? Doesn't seem, I probably wouldn't. Do you buy above 39? I think it's too big. Maybe 50. probably by the close 51, maybe by about 60, 62 probably. And yeah, that's pretty much it. On the daily chart, we have now tested, we're tested the moving average a couple times. So we're probably going to get a close below the moving average pretty soon. And we'll see where we end up getting to. It's possible the bottom of the trading range is here, which is the start of the last bull leg. So, essentially it was the last pullback and then we got a major higher low. So probably I would say the bottom of the trading range is somewhere down here if we get it. But, we're probably going to oscillate and go mostly sideways for the next couple of days. Probably buyers around the moving average tomorrow. We might get a close below the moving average because we haven't had one in a little bit, but probably, going to start going pretty sideways. And yeah, that's today.